and we all would like to be financially secure if a disaster befalls our family or whatever, those things generally require financial return. So, I went off track a little bit, you would have guessed. But in terms of ethical investments, in general terms, why could it make sense? Well, there's two, in terms of investor value, investors get a return from two things. With Sally's project and shared interest, the return is, I'm helping somebody. So it's kind of an emotional return. But we also want to get an expected financial return. Now, again, it comes back to information. It's what it says on the tin. Now, if the tin doesn't fully explain what the investment is, it's a bit difficult to understand what you're getting. But again, that's the role of a financial planner or a firm like Vaughan's offering discretionary services to disclose what's in the tin. But more importantly, I suppose, the tin should be yours. You should decide what goes into yourself. The investment management focus, it's fairly naive to not take into account environmental, social goals if you're a business. Would you want to invest your money into a business that said it was a long-term business but didn't take account of the massive demographic changes in the world? Would you want to invest in a company that says it's there for the long term but doesn't believe that climate change is actually happening? Would you want to do that? So, a company that does account for those things in the way it manages itself, you should be able to see the bottom line return being better in the long run. Because a business that doesn't take account of those two aspects, for example, climate change and demographic change, you could argue is really going to do itself out of business in the long run. So taking account of